Welcome to the Industry Experts Panel at PortfolioWealthGlobal.com. My name is Michelle Holliday. Today, we are welcoming to the show Mr. Dave KRANZLER of Investment Research Dynamics. Dave is a market analyst who runs a precious metals mining stock investment fund out of Denver, Colorado. He is the editor of the Mining Stock Journal and the co-producer of the Mining Stock Daily podcast. Dave is an expert in precious metals, and this is going to be an amazing show. He also writes and edits the Short Sellers Journal. So we're going to talk all about it. Dave, welcome to the show. How are you today?
I'm doing well. Thanks for having me on, Michelle.
We've been looking forward to having you on this show with everything you do and everything you cover. And silver right now is probably the most exciting thing on the planet. So we want to start right off with that. On August the 5th, the precious metals market appeared to peak in terms of both gold and silver and also the mining stocks. Bullion dealers are continuing to report plenty of demand for precious metals, and we know that silver has been the year's top performing asset. The question now is this: could this be it, Dave? Is this the end of the bull run for silver? Did it top out? What are your thoughts?
Well, I mean, you mentioned that the precious metals prices peaked on August 5th. So I suppose if that was a real peak, then it would be the end of it. But I mean, the way I look at this is we're in a very long-term secular bull market in the precious metals market. And that actually started in late 2000. And we had an 11-year cycle that, and when I say cycle, I'm not an Elliott waiver or, a cycle analyst per se, but we had a cyclical bull move that lasted 11 and a half years, essentially. And then we had about a 4.5 year, pullback correction. And I would argue that we're probably maybe almost a halfway through, if this current cycle that we're in, this bull cycle, if it lasts 11 years like the last one did, then we're, almost halfway through. So in that sense, I'm looking for much higher prices for gold, silver, and the mining shares to continue going forward. And so, I mean, we had a just for lack of a better adjective, we had a torrid run-up in the sector starting in mid-March, and it kind of accelerated in June, and it you could say that it topped out temporarily in early August. I mean, it's again, I had been calling for a correction in the sector, and I was very early on it, but I also mentioned that it would be a welcome correction because a lot of, especially with all the hoopla around silver, because that really attracts the speculators and the short-term traders. And so, it felt to me like the market was getting a little bit frothy. So if what we're seeing right now is the extent of the corrective cycle that started in early August, the next move is going to dwarf the last move we just had, in my opinion.
Amazing. Yeah, because many people are calling for long-term bull market. So really the question was sort of tongue-in-cheek because most people are looking for long-term, but we have heard the people out there say, that's it, we're going to fall, it peaked, but we're really looking at a secular cycle. It's probably going to last, like you said, about 11 years. And if you're looking for a massive next move, what are you looking for there?
Well, I mean, what you really need to look at, as opposed to just looking at, what prices are doing, is look at what's the underlying fundamentals underneath that are driving it. I mean, the financial condition of the country that hosts the reserve currency deteriorates more and more every day, and the central bankers are trying to kick the can down the road on an inevitable financial system and monetary system reset by printing more money. And so, you've got just a continuous devaluative policy for the U.S. dollar. And as long as that's in place, and as long as the government debt continues to increase at the rate that it's increasing, and the deficit spending increases, and the economy continues to sputter, the fundamentals are in place, and they're stronger now than they were in 2000 when after the tech bubble popped. When George Bush took over the presidency, the Treasury debt outstanding was about $5 trillion, and now we're at what, $25 trillion. So, and it's projected. I know the CBO projects, but I would take their projection and multiply it by 2, and that's probably be an accurate forecast for where the debt's going. And so, as long as all those factors continue to evolve, it's like nitroglycerin for gold and silver, and of course the mining stocks.
Right. This is really, I know it's a disaster for our economy, and I know that when we talk about the printing of the money, it's quite frustrating to citizens of our country that are aware that's going on. However, for the precious metal sector, it's beautiful, really, right?
It's the only way you can protect yourself from the central bank or the feds and the U.S. government's policies.
Now, Dave, when it comes to politics, does the stock market care whether or not Republicans or Democrats get elected? What kind of impact do you think the result of the election coming up in November will have on the stock market specifically?
I'm basically a political atheist, and honestly, I don't really see. Superficially, there's obviously, propaganda differences between Republicans and Democrats. But ultimately, I don't think it really matters what flavor of politics is sitting in the Oval Office, because I honestly don't really believe that the president or either party really controls the policies that get put in place. It's the big money behind the politicians. Those are the ones that dictate what goes on, and they don't care whether it's a Democrat or a Republican. And so, for either candidate to say, oh, well, if the other one gets elected, it's going to be terrible for the stock market. That's just propaganda. It's ridiculous. And I actually noticed this many, many years ago, because when I grew up, my parents were very active in politics. And my father always used to say, follow the money, see where the money's coming from, and that'll tell you who's probably going to get elected, and it'll tell you who's actually making the policies. And I happened to notice, I used to go through the donor rolls for each presidential candidate, and the more powerful congressman from each party. And I happened to notice that some of the wealthiest guys in the country, and these are guys you don't even hear about very often, like Phil Anschutz, by far one of the wealthiest guys in the country, but he doesn't get the publicity that a guy like Bill Gates does. But he was giving money in equal amounts to either political candidate and either party. So, to me, that just demonstrates more than anything that it's the money that really controls the real power behind the scenes in DC. And so, I don't honestly. Maybe there might be a short-term blip if Biden wins, or a short-term rally if Trump wins, because it's a relief that Biden doesn't win. But over a longer period of time, it's just not going to matter. So, again, to me, it's just political propaganda to say, oh, well, one party's better for the stock market than the other. At the end of the day, the stock market right now is more overvalued than it ever has been in history by many measures. And so, there's an accident ahead of us in the future, and it won't matter who's in office.
Expound on that comment a little bit for us. There's an accident ahead in the future.
Well, there's going to be a stock market crash, in my opinion. It's going to make. Well, I guess the 1929 crash is considered the worst. We had a 22.5% one-day crash in the Dow in 1987. But, And then the tech bubble obviously took the NASDAQ down, I think about 85% from top to bottom. I think we could see the entire stock market drop somewhere between 65 and 80% top to bottom at some point down the road. And I don't know when that's going to happen or what the catalyst will be. It's just what I see coming. And I think we saw a preview of that when the stock market started to tip over in February. And was, I guess the S&P dropped about 34% by the middle of March. And to me, that was just kind of a tremor, ahead of a much larger earthquake somewhere down the road. And again, I don't want to put a timing on this, but, it's just what I think is going to happen. And I guess if I did want to put some sort of time frame on it, certainly within the next 2 years, if not sooner.
Do you see this as an overnight thing that happened like back in the 1920s, or do you think it's going to take a couple
months? It'll happen quickly. I mean, I don't think it'll happen all at once. It'll happen quickly, though. I mean, look how quickly the S&P dropped 34%. It was, I think it started to tip over around February 20th or 22nd. And I think it bottomed out around, March 16th or 17th. So it was basically 3 weeks to go 34%.
Right. I want to stay with the Federal Reserve just for a minute, Dave. Now, here at our company, we kind of regard the COVID-19 as a disastrous economic hoax. We think that the entire thing of shutting down the world's economy was just a horrendous thing to do. And we're predicting some inflation and also some more negative interest rates. But what do you feel that the Federal Reserve's next move is going to be?
Yeah, by the way, I agree with you. I think the shutting down and the quarantining was just it was not just a complete disastrous policy to implement. I mean, it was tragic, and it's going to have a lasting effect and a very negative effect on the near-term future of the United States. But in terms of what I see the Fed doing, and I mean, I don't even really need to put much thought into it. Lael Brainerd, who's one of the FOMC voting members, I forget which Fed bank she's the president of, but she was out last week in the media giving a speech saying there's going to be more stimulus required from the Fed coming. And when they say stimulus, that basically means money printing. So, I mean, I get tired of these propagandist labels like quantitative easing, because it's or they at first they were calling it when Powell started it up in mid-September, he was calling it repo, temporary repo, and then it became semi-temporary repo, and it was just like I called it money printing from the get-go because that's what it is. It's money printing. And so there's going to be a lot more money printing. I don't know if they're going to take the Fed funds rate below zero. I don't know if they can, but the market certainly will take short-term rates negative at some point. I mean, we had a brief period of short-term negative rates in out to 3 months in the T-bill market, and it was either mid-late 2007 or early 2008. So certainly the market's going to take short-term rates negative at some point.
Right. I want to stay a little bit on your thoughts on COVID-19, because what you just said is really impactful, that we're not going to recover from this. And we agree. So many people's small businesses have been absolutely ruined. And many of these were started by, grandparents, who handed it to their fathers, who were in the process of handing it to them, and things like that. New York. I have a couple of friends in New York that say it'll never come back. It'll never come back. They have to start completely over, all these Italian families and the impact that we've had upon the people of our country for what essentially was a bad flu. And I'm not heartless. I believe that, you need to protect older people and vulnerable people from the flu, but you always do. Every winter, you always do. If you have the flu, not to go and visit someone that could catch the flu who might not be able to recover from it quickly. This was, and then, so we're not just talking about economics, we're talking about, psychological, perspectives, people committing suicide, people, it's just, and the domino effect from that, just the heartache and the emotions. And when you're in a fortunate position where you're not horribly affected by it, and then you watch other people, it's just, the question is, how could a decision like this have been made, Dave?
That's a great question. It's a great question. And, I don't really want to, trek into an area that a lot of people might call conspiracy theory. I mean, a lot of times conspiracy theories turn out to be conspiracy truths, but certainly you've seen the same data I've seen, that they've gathered up now, and it doesn't get readily published. You have to dig around for it. But I mean, the death rate, especially if you strip out, as you mentioned, the elderly, over the people over 65 or over 75, you strip out the death rate of that segment of the population, and the death rate is minuscule. It's less than the death rate for the common flu that happens every year. So, and as you say, I think it's something like 95% of the people who, outside of the elderly, who get infected end up with nothing worse than a case of the flu or a bad head cold. I mean, I'm almost positive I had it in early February, and I felt like crap for about 48 hours. And I had a respiratory congestion for a month. It took a month to clear up, but it didn't stop me from getting out of bed every day and working and doing recreational activities. So the only thing that I can really say without sounding like a conspiracy theorist is that you really need to look at, what the motives are behind the people who implemented these policies, and the media, the mainstream media lets Fauci get away with murder. I mean, remember, he originally came out and said, there's going to be 2 million deaths. And it turned out that statistic came from a Bill Gates funded institution over in the UK. And then like a week later, the UK institution revised it down to 200,000. And all of a sudden Fauci was saying, there's going to be 200,000 deaths, and, here we are, 5-6 months later, no one's questioned Fauci on that. They've just everything he says, it's like they write it down and regurgitate it and feed it to the masses. So there's no way to know exactly, if there's some sort of devious plan behind this or what the motives are behind the various entities that drove this policy. But we'll certainly find out as it unfolds. And, I don't think any of us are going to like it.
That's a very interesting point, because there's so many people looking into this and there's so much information out there. There's also insiders that are giving out information to people correctly, to journalists. This will come out. And that's something that's going to be very interesting to watch over the next probably 3 years. That's what I think it's going to take before we really know what happened. And that's not very long from now, 36 months, but yeah, it's been a devastating thing. And those are very good points. When I say it's a hoax, I don't mean there's no flu. I just mean,
right. I know what you mean.
Right. I just want to clarify for our audience. I'm not saying it was a complete lie. It's absolutely the flu. It was absolutely released. Something's absolutely behind it, because it can't come from Wuhan and, along with 5G and, everything else from the same thing. And that was, Fauci funded that particular laboratory, and so did Bill Gates, and Bill Gates is over there in China. It's all these are things we absolutely know. So, but the whole thing behind it, it's very interesting, but it's absolutely the flu. It's absolutely something to be very cautious with, but to shut down the whole world's economy and to decide to do it, that's where the hoax lies. That's where, who made this decision? When did they make this decision? Did they make it 3 years ago? Was this released on purpose? Did they just come up with it and everybody followed the CDC? Why were the journalists not looking into it? You know what I mean? All of these very interesting questions will come out, and you made a great point that it will come out. So this is
Yep.
going to be actually very interesting and exciting to watch as journalists really dig into this. Now, I want to shift back to finance. Well, we have you here. I want to keep getting information from you. What is your preferred cash allocation percentage-wise when you hold cash? Or do you not hold cash because of the circumstances? Do you switch it into metals or whatever as fast as you can because of the falling value? What is your perspective on that?
When people ask me that, I tell them, and I'm not saying you specifically, but people who are like I've got investors in my fund who have a lot of cash, but they also already have a lot of precious metals investments. And I'll be like, you're not going to like my answer, but you should just have enough cash on hand, to pay your weekly bills and spend money the way you want to spend it and enjoy yourself 1 week at a time. And the rest should be in precious metals. I was playing tennis with a buddy of mine, and he's a stock market guy. And he's done well for himself over the years. And he asked me, what my allocation was between non-precious metals related investments and precious metals related investments, being, mining stocks, gold and silver. And I said, well, I'm basically 90% all in the precious metals sector. And I thought for a minute he was going to pass out from horrifications. But he was shocked. And then I talked it through to him. I'm like, look, at some point, the US dollar is going to lose most of its value. So why would you hold on to cash, or why would you hold on to dollar-based financial investments like stocks and bonds? Because at some point, those are going to lose, because they're, derive their value from the US dollar, they're going to lose most of their value. And my default example is what happened in Weimar, Germany. Right? There were people who were the equivalent of billionaires back then who had, billions of marks socked away either under their mattress or in the bank. And when the German government decided to revalue the mark and replace it, they woke up the next day penniless, destitute, except for maybe the hard assets they had or any precious metals that they were holding. But guess what? Gold held its value. And that's where I think is ultimately coming to our system. So why would you hold cash?
Right. And it does look like all of the currencies are in trouble right now. They need a revalue or something. What are your thoughts on everything becoming gold backed that they're talking about?
I think we're eventually moving toward some type of global monetary reset that will involve remonetizing gold and silver. So yeah, what the previous gold-backed system, and I'm talking pre-Bretton Woods, essentially central banks held 40% of their reserves in gold, and so that's how you created the gold backing. In fact, I've got let me see if I can find it here. I've got a numismatic dealer, a longtime numismatic dealer gave me this. I don't know if you can see it, but it's essentially a $5 gold certificate. And it was minted.
Hold it up closer, Dave.
Can you see that?
Yeah, now where does it say gold certificate on it? Where would it be?
Well, it essentially says you can take this to a bank and redeem it for $5 worth of gold. So, and this was printed in, I really need to get reading glasses, I believe 1923. So, and it was, FDR is the one who made these things and the silver certificates irrelevant. So, that's what it means when you have a gold-backed system, is that the government issues the currency, but the currency is readily convertible into physical gold or silver. So, pre-FDR, you could take your currency units and take them to any bank and convert them into gold and silver.
Wow.
Right.
Wow.
And so that's what I think when people talk about a gold-backed system, it means that you're indifferent between holding the currency that's issued and backed by the gold or holding gold because the currency is as good as gold.
Beautiful. So do you think if they do that, then we would be able to switch it out for the precious metals? That's the whole point?
Yes.
Really?
Well, if it's structured the way it was structured, pre-Bretton Woods and pre-FDR.
Right. Unless they restructure it in some other different way, but it's going to be
right. And it could be, they who knows? It could be a digital currency that's backed by gold, something like that. I don't know what it's going to look like. I just think that for me, when I look at the writing on the wall, and when I see the behavior of countries like China and Russia and a lot of other Eastern Hemisphere bloc countries, and the amount of gold that they're accumulating, and the fact that they've been slowly unloading their dollar reserves, to me, it just means at some point we're going to see some type of money system reset that will involve reincorporating gold and silver back into the global monetary system.
Right. Now, staying with gold and silver, when it comes to producing the precious metals, silver and gold, do you prefer the miners and developers or explorers when we're talking about stocks in general? And how do you diversify between them?
Sure. That's a really good question. I mean, the fund that I run, we're overweighted in the exploration juniors, just because it's a total rate of return fund, and I'm managing it for performance. But it's certainly, and it's offset because half of the investment is in physical gold and silver bullion. So that kind of lowers, I guess, if you want to call it the Sharpe ratio of the fund. They also happen to be highly risky. So if you invest in the juniors, especially the junior exploration, as opposed to the juniors that have a proven deposit and they're working to get permits and basically advancing their project towards mine construction. But the pure junior explorers, I just call them venture capital stocks. And you have to realize when you buy into them, you got to accept the fact that you could end up losing most, if not all, of your money. But in return, right. In return, you're looking at the possibility of 5, 10, 20 times upside.
Right, so, because if they do find something, the explorers are really profitable.
Exactly. So, there's a stock that I picked in early 2016, Silvercrest Metals, at 16 cents. And now it's trading at $9.59. So just, that's an outlier. That's an extreme example of why I'm investing in the juniors. But, very, very, very few of them have returns like that. But I will say this, especially right now, there's a lot of what I would call kind of the mid-cap producers, and even some of the largest caps. Like I don't recommend Barrick and Newmont, because I just think, that'd be like, investing in General Motors in the 1980s or something. They're large, mature, bureaucratic, huge corporations. Yeah, they make a lot of money when the price of gold's moving higher. They're minting money right now. But I want to own the stocks that they are going to have to acquire in order to replace the reserves that they're depleting, right? So, Barrick, there's probably not many, if any, 10 million ounce gold reserves left to be found. I mean, there could be. And they're sitting on several of them, and they're depleting them. They're producing gold faster than they can replace the reserves. So the only way that they're going to be able to replace those reserves is to find juniors and mid-cap producers that they can acquire and put the reserves on their balance sheet. That's what motivated the Newmont Goldcorp merger. Newmont needed more reserves, and Goldcorp had a lot of them. So I used to not do this, but now I actually have started investing in some of the larger cap mining stocks, to partially reduce the risk profile of my fund, and also because a lot of my subscribers, They don't want to just see the little venture cap juniors. So what I look for is periods of time like right now when we have a big pullback in the sector, or this one hasn't been that big, but we have a pullback going on in the sector. And I look for the large cap stocks that I happen to like and think they're well run. And if they've come down more than I think they should have, that's when I stick them in my mining stock journal, as recommendations for short or intermediate term investments, that type of thing. But ultimately, I think if you want to maximize your return potential investing in mining stocks, you need to hold a good portfolio of junior mining stocks, and that doesn't mean, load the boat on 3 or 4 names. It means, look for 10 or 15 and spread your capital equally across those.
Right, nice. Now, you mentioned Barrick Gold, and that brings up Warren Buffett's name. And he has just now bought into gold, specifically that mining stock. What is going on behind the scenes right now that triggered this all of a sudden? And also, what is it that makes this so significant to everyone?
Well, I mean, Buffett raised the eyebrows of the gold investing community, or some people call them gold bugs, probably, I want to say 2007, 2008, back then, 12, 13, 14 years ago, when someone asked him about gold, and he goes, gold doesn't do anything. It just sits there. It doesn't even earn interest. So he was poo-pooing gold as an investment. Now, ironically, his father was a congressman from Nebraska for many years, but he was also, libertarian politics and a gold bug. He advocated a gold-backed monetary system. So that was really kind of took investors, or the gold investing community, by surprise when Buffett was poo-pooing gold. So then all of a sudden, fast forward, 13 years, 14 years later, whatever it was, and all of a sudden it comes out that Berkshire Hathaway bought 20 million shares of Barrick or something like that. I don't really know what to make of it, but I do think it's interesting that he's also unloading his investments in the banks, selling his Goldman Sachs stake. He's not completely unloaded his Wells Fargo stake, but he's in the process of unloading it. So I think it's kind of interesting that he's moving money out of big banks and put some of that money into the world's largest gold mining company. So, and again, as a percentage of investment assets, it's a minuscule investment. So that's why I'm not really sure if maybe he's tipping his hand to this idea that maybe we do need to take a look at, restoring a monetary system that has in it. Other than that, because it's not like Barrick's going to outperform the sector. Mm-hmm. At best, it's going to align with its large cap peer mining stock producers, right? So, and he's supposed to be a guy that invests to outperform the market. Barrick's not going to outperform the precious metals sector by not even close. So, in that sense, again, it's also interesting that he's put money into it and that he chose to put money into Barrick. Now, I will say It would be, he's not going to go out and buy up juniors, because he'd have to buy, half of the junior mining stock universe in order to have that investment be enough of a high enough percentage of his portfolio to make a difference in the returns that he produces, right? If you add up the market cap of every mining stock in the world, it's smaller than the market cap of the top 10 stocks in the S&P 500.
Wow. Yeah, it's just an interesting move. You know what I mean? It's just
it is
perplexing.
Interesting.
It's perplexing.
Yes, that's a good word for it. It's perplexing.
So,
and really, at the end of the day, no one can really know exactly why Warren Buffett did that, and did it in a public way, other than Warren Buffett and his closest associates.
that's another point. He did it in such a public way. You know what I mean? He was like making a statement almost. He pulled out of the banks, and at the same time.
Right, at the same time.
Right. It was a real interesting move. So we'll have to watch that one too. I just wondered, so you're perplexed also. That's very interesting that you feel that way. You don't have a actual, well, he did this, A, B, C, D. You're like, what? Right.
Yeah, I don't, like I said, I freely admit, I don't have no idea what it means and why he did it.
Yeah. I mean, and you're so exquisitely knowledgeable upon the ins and outs of all this. And for you to say that was a perplexing move, that says a lot right there to everybody. Now, Dave, I want to ask your perspective. I want to switch gears just a little bit on cryptos, specifically Bitcoin. Where do you sit as far as investing in Bitcoin?
I mean, I would be a moron if I said I wish I'm glad I didn't invest in it when it was, trading at $50 and ran up to wherever it ran to, 19,000.
Or 19 cents.
Yeah.
Glad exactly. I didn't invest in it at 19 cents. I know, just kidding.
I mean, I'm actually... I leave the crypto sector alone. All it does is invite arguments, and I have my own opinions on what I think cryptocurrencies are about. And they are gold substitutes as they've been marketed to be. I don't think they are. I mean, for me, the argument is that the cryptocurrencies don't have any counterparty risk. Well, that's not true, because the cryptocurrency system, in order to function, you have to have a functioning internet, right? So what happens if a big war breaks out and the first thing China's going to do is attack our power grid, and the first thing we're going to do is attack their power grid? How do you have access to your cryptos if you can't get onto the internet? Right? Huge point. I mean, again, it's one of these things where I'm not going to say don't do it. It's a bad idea. It might be a great idea. I don't know. What I think ultimately is that because of the technology we have and, the way the world's set up, I wouldn't be surprised if at some point when we have this monetary reset, the currency that's used is a digital cryptocurrency, right? That would be have gold backing. So, probably the best conclusion I can say is whatever we're seeing now going on in the cryptocurrency market, it's a test run for eventually a global cryptocurrency that everyone uses as their currency backed by precious metals.
Yeah, we're watching Japan roll out its own cryptos, but that's a really good point. And the United States even talking about the digital dollar, to be frank. It was in one of the stimulus packages before Pelosi pulled it out. So we didn't I think they were even contemplating paying the stimulus packages to Americans with digital dollars and having everyone have a wallet. That was actually the linguistics within the original stimulus package, right? Going through the House, but it was pulled out before it went to the Senate. So that's how close we are. I mean, it's not even in the works. It's like sitting on the shelf ready to go.
Right.
So, and you made a real interesting point. What if something happens to the power grids? I mean, we're not completely in control. We have like solar bursts and you know what I mean?
Right. It doesn't have to be a war.
Correct. Right? What are your thoughts on that? I mean, how devastating could that be? I don't want to be a naysayer, but I'm someone who is very against a cashless society, and I'm sorry to be,
yep.
I'm probably one of these people, everybody's for it. It scares me. I find it very fragile.
I mean, it gives up another aspect of your privacy to whatever entity, presumably the government, maybe the central bank, running the cryptocurrency or the digital currency system, right? Because they can monitor what you're spending your money on. There's no privacy. So, and that's why I advocate, if people, believe in cryptocurrencies and want to invest in them, mazel tov, go for it.
Yeah, sure.
But I advocate, if you're going to buy gold and silver, keep it in your possession. well hidden in your house if it makes you feel more comfortable. But for whatever reason, you lose access to the internet and you lose access to your cryptocurrencies, you still have the oldest form of money sitting in your closet or your basement or, buried beneath your tomato garden, whatever. And you have ready access to that. And I mean, precious metals, people think, oh, well, it's hard to convert them into dollars. Well, no, it's not. It just means you got to make a trip down to the local coin dealer. I've never had a problem buying and selling coins from a local coin dealer. And I do a lot of buying and selling of coins online also. I mean, they're almost as liquid as dollars,
Right. And it just makes us so it makes us so fragile, or I guess a better term, what I'm trying to say is it makes us vulnerable.
Vulnerable, yeah.
To especially to banks. And I hate to say it. I mean, I would think that would be a nightmare to have the same entities that have now notoriously ripped us off and are printing our dollars into nothing. And it's not as if it doesn't affect us, because inflation's going to kick in and it will affect everybody when, the price of bread triples, quadruples overnight. But it's very scary to think then someone could turn off your money, so to speak. I mean, if a bank, right? What if they don't like what you say? I mean, this is already, we're watching this with social media, people being punished and people being, stopped from speaking. We're watching doctors be shut down and big YouTube channels be shut down because they don't want them to put out information. What if those same entities have control of your money, Dave?
Well, then they have an even bigger stick to hold over your head.
Right.
That's what they want.
We become very vulnerable. So I don't mean to, this is just a huge thing. I don't mean to open this up at the end, but I did want to get your comments on that. I know naturally as a precious metals person, your inclination is, that's why I'm getting out of cash, Michelle, that's your answer. But I wanted to just open that up for our audience, because that is definitely where we're headed. The digital dollar already going through the house means they're all completely aware of this. This isn't like, we're thinking about it. No, they're not thinking about it. They thought about it 10 years ago.
Well, they're licking their chops at the added control over our lives that it gives them.
Right. So this makes the case for precious metals being my last question. You have an amazing way of breaking down the purchasing power of precious metals versus cash. And I'd like you to just nutshell it for us just as we go here.
I mean, the example I like to use is, as you know, before 1964, dimes, quarters, half dollars were made out of 90% silver, right? And so if, let's just say in 1963, a gallon of gas was 30 cents, right? So 3 dimes and you get a gallon of gas. And the dimes that you were using were 90% silver. Well, after, starting in 1964, they started making dimes and quarters. I think the half dollars were 90% silver for a bit longer, but they, the quarters and the dimes were, I think they were mostly tin or something. There might be a little bit of copper mixed into it, but they took the silver out, right? So, but if you fast forward to today, first of all, you'll notice you can't find any pre-64 dimes and quarters in circulation. And second of all, anyone who uses a pre-64 dime to pay for a gallon of gas right now is a complete idiot, because a gallon of gas, the lowest octane rated is let's call it 250 a gallon or whatever, so as it turns out, the melt value of a little less than 2 dimes will pay for a gallon of gas, the melt value in silver. So, so if you could, at the pump, if you could melt down your pre-64 dimes and use that to pay for the gas, it would take a couple dimes to buy each gallon, as opposed to $2.50 of fiat currency to buy the same gallon of gas. So to me, that, if anything, demonstrates the wealth preservation and purchasing power preservation aspect of precious metals.
And it's just amazing that inflation has worked this way in sort of a circular way, because we're going back to what we know works. And I know that you encourage everyone to, because we don't know exactly what's going to happen. We don't know if it's a digital dollar. We don't know if they're just going to keep printing money. We don't know if we're headed into gold-backed currencies or whatnot. But no matter what happens, your perspective is guard yourself, right?
Yes. Or at least, you can guard yourself with weapons, but also guard your financial well-being by putting as much of your cash as you feel comfortable into precious metals.
Yes. Dave, this has been an amazing interview. So many great topics that we hit on. Please tell everyone about your publications. Also, please touch upon your investment fund and how everyone can follow your work.
Sure. I enjoyed the conversation as well, and you're the one who set the topic, so kudos to you. Investmentresearchdynamics.com, and at the top there's 2 links where you can click on those and find out more about my newsletters. I don't have a minimum subscription period beyond the first month, and with each subscription I include a handful of the back issues because I don't have a login website or anything. It saves me time and money or expense, and I pass that expense on in terms of lower subscription rates. So, and then my investment fund it's a private hedge fund style type of fund. You need to be an accredited investor to invest in it, and if anyone has interest in that, they can send me an email or communicate with me by leaving a comment on my blog post. I won't post it for the public, and I can put you in touch with my partner who handles new investor inquiries. But the fund is essentially 50% gold and silver bullion and 50% mining stocks, most of which are the riskier junior exploration stocks. And it's managed for wealth preservation and for total rate of return. And when investors cash out, they're entitled to receive part of their redemption in actual physical gold and silver if they so choose. And all they have to do is pay for the expense of having it shipped from the depository to wherever they want it shipped to.
Great. Now, if anyone were wanting to get in touch with you, what is your email?
They can reach me. miningstockjournal@gmail.com is probably the best.
miningstockjournal@gmail.com.
Yes.
Okay, great. I want to make sure everybody had that. Thank you so much for coming on this show today. It's been great.
Thanks for having me on, Michelle. I really enjoyed our conversation.
Yes, and we will have you back soon. You'll become one of our regular guests.
Oh, thank you. I'd love to.
Beautiful. Thank you so much. Mr. Dave KRANZLER, market analyst, publisher of the Mining Stock and Short Sellers Journals, also precious metals expert, fund manager, and the founder at Investment Research Dynamics. For the Industry Experts Panel, I'm Michelle Holliday at PortfolioWealthGlobal.com.